We're at the Financial News Investment Banking Awards in London's Boisdale of Belgravia restaurant. Here we've got some of the biggest names in investment banking in Europe. We've asked them what was their verdict on 2013 and what is their outlook for 2014, what's going to happen.
So I think M&A is the one place where I think we were all very hopeful this time last year. I think all of us were calling the great return of the M&A market. And this year, I think our prognosis is probably flat volumes. Certain sectors are going gangbusters. TMT is up 100%, but I think on the whole, M&A is probably more or less flat. So what we'd really like to see is the return of that confidence that allows our chief executives and boards to support doing some transformational acquisitions.
I think we'll continue to see a gradual improvement in conditions in the European marketplace. Whilst 2013, a lot of liquidity, M&A market still quite slow, some of the other areas of the business still quite slow. I think we'll see a gradual improvement, gradual return of confidence, gradual improvement of activity in the corporate marketplace.
Well, look, I mean, this is a business that, as you know, is very based on where the markets are, where the macro is, where the investors feel. We currently feel very good. I think everyone feels good, right? 12 IPOs in the last week, either launched or closed, means that we are clearly in a different market, and as a result, we all are, I think, making money, and we all have pipelines that are growing.
I think if we'd spoken at the beginning of the year, I think the headwinds were still with us, but I do feel since May, June, things have begun to pick up. I think partly because equity markets have continued to be strong. And I think now that IPOs are returning, I think that's evidence of confidence coming back into the system.
I think the trend is positive. We have low rates still, historically low rates, pretty aggressive market spreads, and I think an increased natural need from borrowers. So from that perspective, positive. I think in terms of negatives, one must still watch the European situation closely.
More of the US companies that are coming into the European markets, that's really picked up of late. So there's been about 43 billion, I think, over the course of this year, and we expect that trend to continue.
All of those who has been in Europe for, in my case now, 14 years, 15 years, one does fly a bit of a cautionary flag. But the fundamentals are not bad. I think the backplane of earnings is pretty positive. Most importantly, cash inflows to equity mutual funds. This data is a week old, but 20 straight weeks of net cash inflows into European equity funds. That's pretty unusual.
I think it will be all about regulatory issues. Regulatory issues will mean probably more issuance in the space of lower T2 capital, bank capital, hybrid capital. And I think we will see a continuation of the low interest rate policy, which means a lot of people will probably switch from loans to bonds as well.
On the alternative side, I think some of those looser monetary policies will start tapering out. QE will eventually switch off, and that's going to bring different challenges, so raising interest rates potentially. So